Well, interestingly, our strategy did not hit new lows, our flagship strategy. That is quite normal toward the end of a bear market. We did see the broader averages hit new lows last year, and yet we maintained our low, which was actually back in mid-May. Innovation tends to be the new leadership as we move out of a bear market. And if we're right and the Fed's close to pivoting, whether in rhetoric or otherwise, and they have a lot of reasons to pivot, even more now after the LDI crisis in Europe, we may have something similar going on here in the United States. And we also have big deflation in the pipeline. Just one commodity price after another has been capitulating. So that's at the beginning of the pipeline. And then at the end of the pipeline, we have inventories overwhelming companies. And we have a consumer that is not playing ball as much as he or she was before. So we think this holiday season is going to be quite tough and is going to include a lot of discounting. We believe that the Fed is going to be quite surprised at the deflationary pressures that start hitting the headline inflation numbers during the next 3 to 6 months.
Hello and welcome to Money Talks. In today's video, ARK Invest CEO and CIO Cathie Wood updates about her thoughts on inflation and deflation, Fed's next decision to raise interest rates, along with her thoughts on Bitcoin and digital innovation. Make sure to stick around till the end of this video where Cathie Wood discusses her current market sentiment, whether she is anticipating a pivot from the Federal Reserve next year, and more.
I think that the Fed is looking not just at the economy now, which is pretty weak. And if you combine that with the notion that our major trading partners are in recession, I'm sure they're on guard. But there are also signs that there's distress out there in the financial services sector. We've been watching the credit default swaps of money center banks doubling and tripling. And in Europe, they're out to all-time highs. And so there are stresses and strains in the financial system that I believe have begun to show themselves, first with the LDI crisis in the UK. And the reason this is happening is we are experiencing a major financial shock. If you look at, Volcker is, Chairman Powell is invoking Volcker's name and his Keeping at It book title because I think Chairman Powell thinks we have an inflation like we had in the 70s, 80s. Chairman Volcker increased interest rates from 10 to 20% in an inflationary environment. That's twofold. Chairman Powell and team have increased interest rates 13-fold from their lows. And we believe when history books are written, that economists will be looking back at this saying, wow, what a shock to the system. And so I believe credit default swaps are going up for a reason, and we will find out what those reasons are over time.
Cathie Wood's investment firm, ARK Investment, is making its 2 actively managed crypto strategies available to registered investment advisors. The strategies will be available as separately managed accounts, or SMAs, through a collaboration with the digital asset platform Eaglebrook, the company's announced. The ARK cryptocurrency strategy aims to capitalize on the monetary revolution, said the companies in the statement, claiming that it could serve as a strategic allocation in well-diversified portfolios.
It's very interesting to hear people saying that we'll be able to skirt recession. We believe we are in a recession. The durable goods orders we just saw, really we're seeing the strength there because of activity being attracted to the U.S., a flight to safety. That's why our dollar's been going up as well. Nonetheless, we think we are in a recession. We're seeing tremendous demand destruction. You see demand for gasoline over the summer down to 25-year lows, 1997. Think about that. So lots of demand destruction, and we believe it will continue. The good news here is to hear Michael Evans this morning talking about, hey, we're all on the same page. This could be done in the first 3 months of next year. Well, if the market is the discounting mechanism that it should be, then it should be discounting the peak in interest rates. Yes, inflation peaked. We believe core inflation peaked at 5.3%. This is the PCE deflator that the Fed supposedly pays the most attention to, 5.3 in February. It's down to 4.6. And with all of the price declines that we are seeing out there, whether it's in retail because of too much inventory or way up the pipeline with commodities really falling out of bed, all of them, we think the inflation rate is going to be surprisingly low. We would not be surprised to see deflation month to month sequentially for a number of months during the next 6 months.
This collaboration should allow ARK to expand its services beyond exchange-traded funds or ETFs. An SMA is a portfolio created by a financial advisor or investment firm for a single investor. On ETFs, investors own shares of the fund instead of the underlying securities. The top-tier fund at ARK, the ARK Innovation ETF, seeks the long-term growth of capital by investing in disruptive innovation companies, according to its official website. It has $7.946 billion under management and was down 60.11% as of September 30th, while the S&P 500 declined 23.87% and the BTC price dipped over 58% in 2022. Wood is known for being a big Bitcoin believer who predicted that BTC would hit $1 million by 2030.
Absolutely. I think they do not appreciate how much demand destruction has taken place out there. But this holiday season, I think, will be telltale that way. And so I do think we're looking at a major pivot. If we're right that deflation, and we've been saying this for a while, so consider the source, but if we're right that deflation, both for cyclical reasons and for secular reasons, all we do is look at technology and the cost declines associated with different technologies, and they're massive. So we think that inflation during the years ahead is going to surprise significantly on the low side of expectations.
It's no secret that the Federal Reserve is committed to getting inflation back under control. The central bank raised its benchmark interest rates by 75 basis points last week, marking the third such hike in a row. ARK Invest's Cathie Wood points out the potential problem of the Fed's hawkish stance. None of those voting on the Federal Reserve is focused on the significant price deflation in the pipeline, she tweeted last week. The Fed seems to be making decisions based on lagging indicators and analogies.
Well, I think they have been basing their outlook and their policy on two lagging indicators. Seems they've been paying more attention to the CPI year over year, which is still at over 8%. And employment. Both of those are lagging indicators. The leading indicators, which are all in the pipeline, easy to see right now, are all saying that prices are going to come down. Inflation certainly will come down, but I think the big surprise out there is the number of months we will see actual deflation, negative prices. And it's not just because of the U.S. In fact, we're benefiting from the flight to safety from the rest of the world. What's going on in China is highly deflationary. What's going on in Europe, the same. This energy is a huge tax on that continent. One of the other things that's happened in the last in the last week that I think is fascinating is that both Japan and China have basically supported their currency, and they're basically saying no mas. And in order to do that, what are they doing? They're selling dollars and buying their own currency. So effectively, China and Japan are doing some of the easing that we think the Fed will do, increasing dollars in the system.
So, do you agree with Cathie Wood that Fed will be surprised with deflationary pressures? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.